Dear friends, this is Vinney Chopra. Hey, I come live through podcast. Please subscribe to the channel right away if you've just not done that so far, and also give some great comments and 5-star reviews. As you know, we are reaching 70,000 downloads now, guys. In few months, 70,000. As you know, the book I wrote just about a couple of years back got 400 reviews now, all across the world. So I'm very, very pleased about that. We converted it into Spanish also. So my Spanish speaking people all across the world, you could get it also from Amazon. Then my second book is already out and making great reviews on the positivity. And my third book, Vinney is a salesperson, you can tell. My third book, Senior Living Investing, is also coming very soon. That'll be my third one. And the fourth one is on lending made easy. So it's going to be exciting. I thank you so much for spending this time with me and with my distinguished guests that I bring along. And I have just a great friend who has helped me so much in my career. And as you know, I mean, my overnight success took me 11 years. I say that. Kim, welcome to the show. How
Hey,
are
thank
you?
you. I'm doing well. I'm doing well. Thank you for having me.
You're looking great. And I know I want to thank you because, yeah, you helped me so much. 26 syndications. I
Right.
mean, this young lady did all the PPM and she had all the, things to teach me how to do this syndication business correctly and, stay out of trouble, out of jail. So I really owe a lot to Kim, and she's here today. And we're going to talk so many great things about new things that have happened just in the last few months, right there in the SEC, different accreditation, of course, raising money and all the new things, Kim. So let me introduce Kim. I want to introduce her formally. She's the CEO and the president of syndicationattorneys.com. As you know, Kim Lisa Taylor is a nationally recognized corporate securities attorney, speaker, and the author of the #1 Amazon best-selling book. Please go and get it, guys. How to legally raise private money. God knows. Please show that, Kim. Where is the book? There we
Okay.
go. I want everybody to buy that book, guys. This is the best book that Kim has put so much efforts into it. And it actually, when you go to Amazon, it just comes like my two books and Kim's book together. Just
That's right.
get it well. You will not feel sorry about that. It's great knowledge we have put, she and I into these books. And also she's the founder and syndication attorneys PLC, the investor marketing materials.com. I'm really excited about it. I'm going to talk to Kim about that. And you could also go on her websites, who they prepare, they purpose. What is that? Okay, whose purpose is to provide quality legal advice, in plain English. That's one thing I really, really have liked, in working with Kim over the last 14 years, actually 13, 14 years, and the other part is offering all the documents, the professional design investing materials. She's able to, her company can put it for you and for clients nationwide. And Kim has been the responsible attorney for the hundreds of securities offerings. And I know mine is small number, 26 of them, but it's been just so wonderful working with her, and it's listed in the 2020 top 100 attorneys and the top 100 in finance magazines. Kim, welcome to the show. I
Thank
am
you.
so excited to have you with me. So share with me, where is your journey? How did it be started? I know, by the way, Kim has been interviewed, by me by probably 2 times. So please go, and maybe in the show notes, we'll put the episodes also for you all to go after, because you want to know. Definitely having the best attorneys in your team. That's the best amount of money you can ever spend. So, Kim, tell us a little bit about you quickly, and then where you are and how these changes are going to be helping our investors and everybody.
Yeah, that's right. Well, I started out in syndications back in 2007. I went to a real estate training seminar because my husband and I wanted to learn how to buy multifamily. And while, of course, we bought the home study course, we took it home, did absolutely nothing with it. Eventually went to a live event and learned how to do it correctly. And during that event, we learned that there, gee, if you wanted to buy multifamily, you have to raise the money. And I thought, well, if I need to do that, then I better learn how to do it right, because I was a fairly new attorney at that time. And so I came back and went to a private money boot camp and met another attorney that was teaching that at that time. And ended up working with him for a couple of years. We started a law firm together in California, doing securities work, and that's where I met Vinney.
Yes.
And my husband and I actually did go on and we syndicated a multifamily property. We had a 27-unit apartment complex in Columbus, Ohio.
In Ohio,
9 years. We had it for 9 years, and we just sold it in 2019. But during that time, I decided that I really liked this area of the law, and I loved helping people put deals together and helping them work through the maze of securities regulations and structuring deals with investors and all of that. And so I really enjoyed that a lot, and just kind of made that the focus of my practice. In 2016, I moved to Florida and decided to open up a Florida law firm. And so that's where syndication attorneys came from. And so I've been doing this pretty exclusively since 2008. And, it's going really well. And, the firm just continues to grow and flourish. And can't thank you enough, Vinney, for all you do for us. But we just got great clients. We love our clients, and we love helping people put deals together, and we love helping them help their investors.
Totally, totally. Now, let me ask you a question. I know some people say, I want to do joint venture. I want to do that. Can you kind of say the myth behind it? And, what's syndication for some new followers of mine? Yeah.
Sure. So the difference between a joint venture and a syndication is that in a joint venture, all of the members have to be actively involved in generating their own profits. So you can't have any passive investors. And it's not what you call it, it's what they actually do and whether they participate that will ultimately determine whether it truly was a joint venture. So if you have people who are too busy and they have jobs, they don't want to be involved, they just want to passively invest, then they're not suitable for a joint venture. The other thing about joint ventures is if you get too many people in them, and everybody is, in a joint venture, usually we'll use a member managed LLC for the structure. And in a member managed LLC, all of the members are considered to be managing members. And they all have the right to bind the company contractually, to open and close bank accounts, to make decisions by themselves. So you have to be very careful about getting too many people in a joint venture, because you'll have too many, I've learned that the magic number is 5. If you get over 5, they don't work. If you have 5 or less, they can work, as long as you have the right 5 people. So you've just got to be careful, because too many people trying to make decisions is going to be problematic. And it's going to cause problems down the road where somebody's not going to be happy. You're going to have to buy them out, or they could tie up the whole thing in litigation. It could just become a big nightmare for you. So just be cautious. Joint ventures are great for small stuff when you're first starting out, but they don't give you experience for syndication. So if you want to become a syndicator and you want to do 26 deals like Vinney did, you got to start a track record of doing syndications. So even if you're only raising, $300,000-$400,000, we have clients that still say, no, I want to do the syndication, so I have the right track record. So then the difference is, okay, so if we're not doing a joint venture, what are we doing? So we're going to be doing a manager managed LLC to buy the property. And the manager is going to be comprised of you and maybe 2 or 3 other people in your management team. And then all of the members are going to be passive investors. So that's the other way that we structure it. So once you're doing that, then when you're selling interest, passive interest in your company like that, those are called investment contracts. And investment contracts are securities. And if you're going to sell securities, then you have to comply with securities laws, which means you either have to register the offering, that means getting pre-approval from regulators before you sell it, or you have to qualify for an exemption from registration. Well, so the registration process is like going public, right? The IPO, it's what Facebook did, Google did. It takes a very long time. It's very expensive. You won't be able to do that when you're trying to buy a commercial property and you only have 90 days to close. And it's just too much. You don't need to. So the alternative, as I said, is to qualify for the exemption. So the exemptions allow you to raise money from private investors as long as you follow a specific set of rules. And the rules are going to dictate who you can invest with you, what kind of financial qualifications they have to have, and whether or not you can advertise. And these rules are self-executing. So you have to pick which exemption you're following, and then you have to keep records on how you're following that rule in case you're ever questioned about that.
So true. And you taught me very well. You said, Vinney, it's the pre-existing relationships and the context and the log of all these investors. When you talk to them, what did they talk about? The comments. I still remember, I still have those worksheets. Now we use Active Campaign and MailChimp and my iPhone for all these contacts and Zoom meetings, recordings and all. But you are so right. It's so important for the 506B, which is the family and friends
That's right.
exemption, right? You know,
Right.
and yeah, so no, that has really been foremost in my mind. And our investors have increased from one investor, came now to 378.
Oh, that's fantastic.
I can raise 5 to 10 million in a couple of days now. Praise
Oh,
the
that's
Lord.
great.
That's
That's
very good,
really,
But
yeah.
tell us then, so the syndication, now, is it true if some people are accredited, you don't need to have a whole PPM? Is that right?
So if all of your investors are accredited investors, you're not required to have a private placement memorandum.
Hmm.
However, you are obligated, if you're selling securities, to give the investors all of the information they need to make informed consent. And
Yeah.
that's what the PPM does, is it provides them with all of the disclosures and the risks about the things that could possibly go wrong, that could cause them to lose all or maybe, part of, or even all of their money.
Yeah.
And so if you give them the PPM, then you already know in advance, you're giving all the information, the same information to all of the investors. They all have understand the risks. And by giving them that PPM and then having them sign a subscription agreement, they'll certify to you in their subscription agreement that they read the PPM, they understand the risks, they're willing to take those risks, and they're assuming those risks. So if one of those things happened that you told them about in the PPM, and then they can't hold you responsible for that if it causes them a loss. But if you don't have that PPM, you kind of lose that protection.
Yeah.
So you have to be careful. So we don't recommend, if you only have, again, it's kind of that magic number, 3, 4, 5 people who are going to invest, and you know them extremely well, and they're all accredited investors, you won't need to have a PM. But if you're going to have even one non-accredited investor, or you're going to have more than that, you really should have, well, you'll need the PPM if you have any accredited investors at all, even one. You should have it if you have more than 4 or 5 accredited investors that you know very well.
Got it. Thank you. No, very nice, very nice. Now, what are these changes now where SEC kind of loosened up a little bit about?
Well, they started to. So the last administration proposed a finder's rule that was very exciting. And it would allow people to refer, just ordinary people to refer accredited investors to deals and receive a commission for that without having to have a securities license. Unfortunately, that seems right now it's kind of dead in the water because the new administration, there was a big change in control at the SEC, and so they haven't picked it up yet. We're hoping that they do because it actually got all the way through the public comment period, and I actually submitted a comment on that.
Oh,
so, I'm hoping that it does get picked up again and come through. So if you want that to happen, then you need to write or call your congressmen and your senators and tell them, hey, let's revive this proposed finder's rule with the SEC and get them to pay some attention to that. So yeah, right now we're just waiting. Yeah, there were two tiers proposed. One where somebody could just do it for one time, one deal. They just happened to know some people and they could get paid a commission. And the other was for people who were going to do it ongoing, that they had a lot of relationships already. They could refer people to deals. They could get paid a commission. So both of them were really hopeful and would have been a great thing. But so we just have to keep watch. We will let you know, if you come to our website, if you get our newsletter, then you would be getting that information, and we'll let Vinney know when that happens also, so he can keep you informed. But there's two other things that did happen. In December, a rule became final that expanded the accredited investor definition. And so there's a couple of things they did that aren't all that helpful, but one or two things that might be helpful. One of them is that for accredited individuals or couples, right? For couples, you now can consider married couple or spousal equivalents. Okay, so cohabitating couples, or you can combine their income so that they can become accredited. So that's helpful, and that opened up, I think, some more people that wouldn't have been able to invest as accredited investors before. They also added a rule that said that certain people with certain securities licenses could qualify as accredited investors.
I see.
But the problem with that is that a lot of those people with securities licenses, if they're active, if they have those active licenses, they have them hung with a broker dealer who might prohibit them from investing in these kinds of things. So, but the SEC reserved the right to go ahead and add additional categories to that later on down the road without having to go through the formal rulemaking process. So it's possible, we're hopeful that at some point they'll start adding licensed attorneys and CPAs and, other licensed professionals, or maybe people with MBAs, some other people that have some qualifications that might be able to understand and be accredited, because their whole purpose, the SEC's whole purpose, is to protect investors. And they're particularly concerned with what they call retail investors. And those are your family, your friends, individuals that you know yourself, or you. So we're all the retail investors, not like the institutional investors or private equity funds or family offices. They're able to protect themselves. But for the individuals on the street, we're the retail investors that they're trying to protect. So that's somewhat helpful. So that became effective December 8th. Now there's another thing that happened. The SEC looked at all these different securities exemptions, and they said, boy, there's a lot of conflicting rules between one versus the other. How can we do something to kind of make them all consistent? And they called it harmonization amendments. So for Regulation A+, they actually increased the limit that you could raise in a 12-month period from 50 million to 75 million. These go into effect March 14th.
Oh, okay.
So it's coming up very quickly. So Regulation A+, so that is it's a streamlined public offering. If you want to do a Reg A+ offering, we can help you with that. We actually just hired somebody who does those. So you could, many of you have probably heard of Grant Cardone. He has a Reg A+ offering, and, of course, he has a marketing machine, and that's really what it takes to make that successful. Of course, Vinney could probably pull one off because he has a marketing machine too. He could do it too.
Right time, because my goal now, Kim, just to let you know, is $2 billion is in my assisted living constructions and managing and buying. So that's like,
so maybe he's in a position where he could be thinking about, you could be thinking about doing a Reg A+ offering. There's regulation crowdfunding that also has increased from $1 million to $5 million. Now, we kind of thought at first, we got a little excited about it and thought, oh, great, that'll open it up for some real estate syndicators. But the problem with regulation crowdfunding is that if you're raising more than $500,000, you have to have an annual audit. And the SEC has estimated the cost of those audits to be $15,000 or $20,000 per year. So that's going to kill a lot of deals if you have to do those audits. So that's why a lot of people do the Reg D, Rule 506B, and Rule 506C, because those audits aren't required. they made one other change that's kind of important, and this was really unclear before, is that if you were doing successive offerings without a sufficient break in between, then these offerings could be considered integrated by the SEC, where they would say, no, it's really part of all of one and the same offering because you're doing them in such close succession. And now they've actually clarified that if you stopped doing one before you, and wait 30 days before you start another. So you stop your raise, you're done with your raise for the first offering, and you wait 30 days, and then you go on and do the next raise, that you could actually go from like a 506B to maybe a 506C, and the two of them wouldn't be considered integrated, because if they were, then one would be in violation or the other, right? Because if your 506C was integrated with your 506B, that wouldn't be so bad. But if you tried to do a 506B after a 506C and they got integrated, then they would say, well, no, that's all part of a 506C offering. And now you included non-accredited investors. You didn't verify them. It doesn't apply. You're in violation. So now they've just clarified that they're not going to do that, that they're not going to worry about that anymore. So that's the main thing. One other thing they did was they said that for people that have invested in 506C offerings in the past with you, and then you do another 506C offering, that certification that they did for the first one is good for 5 years.
Oh, it is. Okay. I was going
Good
to
for
ask.
5 years. Yeah. So all you have to do is you just have to verify with that investor, maybe have them sign something that says that their financial situation hasn't changed, but they don't have to go through the verification process again. So that will make 506Cs a little easier, because one of the deterrents to doing 506C is that the investors are like, I don't want to be bothered with that every single time. It's a pain. You know?
Me too. Me too. That's what I came across. My investors, they say, Vinney, you know us. We have been dealing with you for 12 years. So
Right.
why do you want me to send all these things now? Yeah.
That's right. That's right. So there you go. So that's really helpful. As long as you have that 30-day gap in between, you're good. Let's see. One thing I wanted to say, this is not really a new update, but this is a question I get asked constantly.
Sure.
And that is, how do we establish that substantive relationship?
Yes.
So there's an article on our website. If you go to syndicationattorneys.com, you look in the library, pull up the articles. It's the first one that will come up, and it says, what is a substantive relationship for a Rule 506B offering? And so the SEC has clarified what they think that what information you need to know about that investor to consider that to be a substantive relationship. It's not about the length of time you've known someone or the number of touches. It's about whether you had a live conversation with them and asked them the right questions about their financial qualifications and their investment goals. So if you read that article, there's even some example questions in there. If you adopt that as your policy on how you're going to develop relationships with investors, you'll be in good shape.
I love that. I love that. And I want to say kudos to right now. Please go to syndicationattorneys.com, guys. I mean, Kim and her team puts together so many great white paper and articles. And I tell my students in my academy all the time, literally, because, that's so important that all of us understand what's all these things. Thank you for putting that library together, Kim.
Oh, you're welcome. Thank you. Yeah, no, it's served us very well. And one of the reasons I did it is so that, you can hear somebody talk about something, but if you can read it and, and all the articles are just 1 or 2 pages, they're very easy to read, then it just kind of gels, right? And then you can reference it back and, so we wanted to make that resource available.
Awesome. Any other thing you would like to tell the newbies or the old bees?
That's the main thing. If you read my book, that's going to be step by step going through the syndication process. It's going to help you understand why you have to do things in certain ways. And once you have that understanding, then you're not going to be afraid anymore, right? You'll be confident to go out and raise the money.
That's so true. And, just to say that, I know when I started 14 years back and I learned this business, came my wife always, Kanchan, she always was worried, we got to take care of investors' money first. which has been our mantra all these years, because we have fiduciary responsibility
That's
for the
right.
millions of dollars. I think I've raised 140, 50 million now. And we have given back also because 22 deals have already done the circle. I've given millions back. I'm selling four right now
Oh,
and
wow.
giving money back. So that is good, But the thing is, you got to make sure that you are transparent, guys. You are totally record keeping wise, everything, because that's their hard earned money. Investors' hard earned money is what they give us, to buy larger deals and things like that. So it's a big thing. So syndication, SEC, the reason I said that is a watchdog to take care of the investor's interest.
That's
And we
right.
need to have very conservative assumptions. I will say one thing, in now where everybody wants more money for their product or the apartment, and you could tweak some numbers, that's not how to do it. Less leverage, like we just bought the Austin deal, 65% LTV,
Oh,
because
that's a
we
very good
do
idea.
not want to, go too high, right, Kim?
Yeah.
Yeah. And, that's what we are finding in assisted living too. We are putting very, very conservative numbers in our projections and everything so that we deliver what we promise. And that's the real true test of a syndicator, is to give, what we promise. The last thing I was going to say was, like, the SEC is designed to help us, and do not shy to pay the syndication fee, attorney's fee. I want to say that again. I mean, many of the people say, you know what, I don't want to spend it. Okay, hold on. I mean, that is the money you don't want to really not spend. You want to
That's right.
spend to keep you out of trouble. Literally,
Right.
right, Kim?
Right. Well, and we're doing more than just drafting documents. I mean, our goal for syndication attorneys is to educate
Yeah.
and to help people like you, Vinny, who start out and they don't know anything, and
Yeah.
they're concerned and they don't know, how to comply. It all seems very complex.
Yeah.
And we try to help them navigate through all of that and understand it and not be afraid. That's really what it's all about, because once you understand it and you understand why you have to do things the way you do,
Yes.
then you'll be able to raise all the money you ever want.
Totally, totally. Do you still have that program about the consulting? Like
Mhm.
oh, please share with that. Yeah, with our
Yeah,
audience. I
we
would
have
like
a
people to
pre-syndication
contact
retainer.
you.
Yeah,
Yeah.
we have a program called a pre-syndication retainer. It gives you up to 3 hours of one-on-one time with the securities attorney from our firm. And we'll also give you an investor marketing plan template. That the whole purpose of this 3 hours is to help you develop your own investor marketing and acquisition program.
Yep.
And we'll walk you through it. We'll help you write that out and design something that works for you and with your style. And then we'll help you decide what kind of marketing tools you're going to need to help execute that program. Because there's at different points in the process and your investing process and the growth of your company that you're going to need to share information with investors about what you do, starting with your brand and your business cards and your company name and your domains and your websites and all of those things. But not only should you have to have those things, you should have them reviewed by a securities attorney to make sure that they're not going to be in violation or get you some negative attention from regulators. So that's the whole point of that program. We'll give you an investor relations blueprint. We'll invite you to our syndication masterminds. We have clients only syndication masterminds every Friday at 9 a.m. Pacific time.
Good.
And we'll give you the investor relations blueprint, the marketing plan template. So, and you just, you get a lot of value for it. And then we'll also give you a discount off your first syndication equal to or greater than the amount of that fee. So
Wow.
it's really just, the whole point is to try to help you get from where you are right now to where you want to be. And with that, we can introduce you to other contacts that we have that might be helpful along the points of your business.
Love it, love it, love it. Thank you, Kim. You've given so many great nuggets. Also, please reach out to syndicationattorneys.com. We'll put also the links below right there, and also link to Kim's book and my books and all. Guys, thank you so much for spending this time. If you like the content that I bring to you every week, until I have 4 podcasts now, guys. I don't know if you know or not. That is the one with the Innovative Senior Living, our podcast. Vinney and Bo show tomorrow that I do live at 6 channels, and we do it in a podcast. That's on every Friday. And now I'm doing the Clubhouse. So please meet me on Clubhouse at 3 p.m. Pacific every Thursday. It's growing like crazy. And I bring great guests over there also for you. And then, of course, my Vinney and Syndication Made Easy, this live broadcast that you see every week, and also my motivational channel. So it's going to be fun. I mean, we are in for a big ride together. So please like, comment, and share, and give us 5-star reviews. Thank you so much. Thank you, Kim. Really appreciate it. Thank you so much.
Be sure to listen to Mr. Smiles next week with more golden nuggets and top-notch coaching tips. You can reach him by going to vinneymultifamily.com. Be sure to like, comment, and share to show everyone how Mr. Smiles has brought your apartment syndication business to the next level.